Good morning, folks. I hope you are well, and welcome to this morning's video. So, the only pair I have on watch today is euro dollar. The market looking pretty awful across the board at the minute, as it has done for a considerable period of time. So, just going to let the market do its feet, and hopefully, at some point, we will get a trade. If we don't, then it's all good. So, euro dollar on the higher time frames, we have this high here. Okay, we do have this high above, okay, or these two highs above there. But what we also have, if we just look at all of this price action here, the sharpest move and the one which resulted in the biggest sell-off was this one here, okay, suggesting that there must have been a lot of liquidity there for price to be able to sell off so aggressively, okay. And the clue that that was a valuable area is the fact that we near missed to it here, okay. So even though in the longer term, in the higher degree, we may be heading back towards there, we could see a move to the downside in the meantime to potentially come down to this area, perhaps retest the back end of this sharp move, and then maybe we're heading to that high from there. But it doesn't mean to say we can't capitalize on moves to the downside in the meantime. Okay, so if you just look at what price has done, okay, prices stalled in that area. We had a daily candle which wicked just above that area and closed back below it. That may be an early sign that we are heading to the downside. We shall see. We do have this element of this 1, 2, 3, and if we do measure this, you could say, okay, well, if the leg out is of a similar length, which it usually is, that would actually take us up to there. But again, that doesn't mean to say that we can't capitalize on a short-term move to the downside in the meantime, even if that was to occur. Okay, if we just zoom down a little bit, you can see that we've got an evening star formation on the multiple wick rejections on the 4-hour chart, and this kind of evening star formation with this hanging man in the middle. Okay, and you can also see that we have a reversal structure. We have the 1, 2, 3. Okay, we have an impulse correction continuation. We have the middle section, which has a 1, 2, 3 in it. Okay, this is what I call this here is what I call the FOMO channel. So when we get close to the area of value, but we don't quite tap into it, and then people are trying to sell this whilst the orders that are still up there and being placed in that area are dragging price back up, which causes this corrective price action. Then we push out to the upside, and the last bit of the move has momentum as well. That's also perhaps an early clue that we may be pushing to the downside. However, we do have to factor in the fact that if we just look at this on the 1-hour chart, I'm just going to look at this on the 15. Okay, so on the 1-hour chart, this could be if we just put a ray line on there, this could be a bull flag to push higher. Okay, maybe we get a near miss there, and then we come up, get this kind of structure, maybe near miss that high, come down, tap into the high there, and perhaps retest the back end of that, and then push higher. Okay, and if we just zoom back out, let's measure this impulse here. And if we assume that the continuation leg out would be of a similar length, where does that take us? Let's have a look. I'm very confident that that lines up with, so that takes us up to that area, okay, which would make contextual sense. So where does that buy idea become invalidated? Well, it becomes invalidated, in my opinion and experience. I know people don't value experience much these days, but I do. I'm old school. That becomes invalidated if we break below this area of inflection or area of interest, as I've got it marked on there, and we consolidate afterwards, because then if we get the dropout, an impulsive move to the downside, and we're back below here, we would be back below here, and if the market consolidates underneath, that is usually the banks and the bigger players stacking their orders for the next wave to the downside, because if this area was valuable and we tapped it, we would likely retrace aggressively from there. Okay, if there was enough liquidity for that bull flag structure that I was talking about to play out. Okay, so if we consolidate underneath, that implies that price did not find enough liquidity here to send it to the upside, and the consolidation would be the confirmation of that. Okay, and you might be thinking, well, why are you not looking to get long? Well, again, this is a daily forecast, and this if what I just drew on was to form. Okay, you don't have to be a genius if you just look at the 1 hour chart to realize that that would not be ready by the end of the day. End of the day, if you just count the candles, I don't trade beyond 7:30 at night. Okay, so that would that probably wouldn't be ready until, let's say, Friday morning. Okay, so maybe I'll be looking for that Friday morning. We shall see. But as daily forecasts go, I'm just looking for the dropout. Okay, and that consolidation, and then I would look to get short. And then I will be able to manage this with a 10 pip stop, which is the minimum that we go to, down to that low, which was a sharp low. And that is important because we have a low there where there was an exchange of liquidity which caused price to smash through this high here and tap into this area. So there must be a fair amount of liquidity there. So at least if price responded from that area and it started becoming a bit more complex, I could manage it down to that low. But my target in this instance would be, I would measure from the range there, and in this instance, because the profit potential, if I remember correctly, would only be about 4.71 with the 10 pip stop, and if the stop was slightly bigger, the risk to reward would be less. I would actually, in this instance, set a take profit at the 100% mark, not at the 90% mark. And one of the reasons being is because if we just zoom out again, okay, this could be, we also have to factor in, because if you just look at this whole thing, okay, we have an impulse and a correction which is extremely wide relative to the move down which has preceded it. Okay, now why is that significant? Well, it's significant because sometimes we get what we call an M style pattern. It's not really so much an M style pattern in this instance, but basically when the correction gets very wide relative to the move down which has preceded it, often this becomes more neutral, and instead of us seeing continuation to the downside, okay, we end up breaking back to the highs to test this high, okay, and then we often retrace from there, then get the consolidations and move to the downside. Okay, so why is that significant? Well, it's significant because if what I was forecasting or what I'm looking for was to play out, then potentially, right, because we have this structure here, we might move down into those areas, and this might actually, okay, let's try that again. We might move down to those areas. I'm drawing this crudely, but I'm trying to illustrate the concept. We might get something like that, and then this becomes a 1, 2, 3 structure. This becomes a bull flag. Maybe we break below, retest the back end of this, or especially that sharp move. We have to pay attention to that. Look how sharp this move is, right? Okay, so if we got something like that and we tapped into that area and we retested the back end of that, this could provide the market with enough liquidity to send this to the upside to give us that M style pattern. And if we just measured this, okay, this whole impulse, and we assume that the continuation leg to the upside would be of a similar length, look where it lines up. It's absolutely, but I didn't actually do this. I'm literally just last night, I just did this on the fly. But these are mathematical calculations we're doing. Okay, they're not random. Okay, what the things that the market is doing when there's structure to it is not random. Okay, so we do have to factor that in. So that's partly why I would set the take profit there in case we got this structure to give us that kind of M style pattern which I was talking to. And these things took me a long time to actually learn. Okay, and one of the things I've noticed in life in general, but especially in the trading industry, is that people will come along that have like literally a couple of weeks experience, and they'll say things like, yeah, they'll effectively say, son, let me show you where you're going wrong. And although I'm very open to learning new things, I'm always open to learning new things, I think to myself, how can you have seen and blueprinted as much price action in 2 weeks as someone who's been trading for 5 years? Okay, I see loads of people doing this, and it's always men. I don't think we need to be a genius to work out why. But I think sometimes people feel threatened by people that are further along than them. That's not the way I do things. And they feel a need to actually mentor them or tutor them in some way to kind of bring their own self-esteem up. I don't do that. There's an old saying in business that losers focus on winners and winners focus on themselves. Okay, so don't be the sort of person that goes down that route and adopts the kind of crab mentality, which is where, if you don't know what crab mentality is, I discovered this a few years ago. Basically, if you put a crab in a shallow pot, they can usually climb out of the pot, okay? But when you put a lot of crabs in a pot, a shallow pot, every time a crab tries to pull itself out, the other crabs will grab it by the leg and pull it back in again, okay? And I call that socialism, but that's another argument for another day. So don't be that kind of individual. Look to pull yourself up rather than putting other people down. Okay, I don't do that. I'm focusing on what I'm doing. There is much better traders in the world than me. I am in the top 5% of traders in the world, but there are much better traders than me. But I'm not interested in what they're doing. Okay, I'm learning from who I've, my mentors, and I'm picking up little bits and pieces along the way. I'm still learning, but I'm not focusing on what other people are doing, with the exception of those people. I'm focusing on what I'm doing and improving myself. Okay, so just a little food for thought there. If you're one of these people that's very new to trading and is trying to mentor everybody, okay, wait till you have a bit more experience, okay, before you start going down that road. But anyway, that is euro dollar. I hope you've enjoyed this forecast and the lessons that I've tried to bring. And of course, if I do ever place a trade, the market has been very sparse in terms of opportunities, at least ones which I've learned to see. But if it does ever shape up with an opportunity, then you can see at the bottom there, I'm trading a live account. And if I am in a trade, there will be a little circle, a little blue or a red circle next to whichever position I'm in. So you can see that I'm actually taking these positions. I've got no interest in making things up, pretending I'm smashing it and all that kind of nonsense, which you see on Instagram. All I'm interested in is teaching what I've learned to help people when I can, and being transparent with the trades that I place if they actually shape up. But that is euro dollar. That is my thought process today, and I hope you've enjoyed this video, and I'll speak to you again soon. See you soon, folks.